Stocks marching higher Wednesday on Goldman Sachs strong earnings and vaccine hopes. But are investors getting too giddy? Well, let's ask Liz Miller of Summit Place Financial Advisors, joining us from Hilltop, Pennsylvania. Well, Liz, Goldman out with results today, but it, as well as the three banks that are reporting yesterday, significantly boosted their loan loss reserves. Should investors be worried?
Well, I think you need to keep in mind the banks are really putting their money where their predictions are, right? For them, they're looking at an economy and really saying it does not look hopeful. Now, maybe they're being overly conservative, but when you look at JP Morgan's release and you look in the numbers, non-performing assets are up 50%. They're still at low levels from a year ago, but sitting here already in June, the end of June, they've seen real big increases in both consumer and business non-performing assets. So now they're not writing anything off yet, but when you have that many non-performing already and the economy has not started getting back to work to see who can survive, I think you see really smart forecasts when you see what they're doing. And I think we need to be mindful of what their loan loss reserves say about their business forecasts.
Well, given that picture that you painted, that thanks to the aid of banks, have investors driven the markets up too far at this point?
Well, I think the markets are fully valued. I don't know that I would say too far. What I think we've got is, just as I said, we're looking to look under the covers to come up with forecasts from the bank. Nobody is providing long-term forecasts. So I think we're seeing the markets regularly respond very quickly to short-term information because there is no long-term information. So today we have good news on a vaccine and the markets are going to respond immediately. When we start getting longer-term information and longer-term forecasts, then I think the market will adjust to that information.
But should progress on vaccines, such as the headline today regarding Moderna, do they justify the advances that the stock market has made, especially when people like you worry about what you call the last mile?
Yeah, I think that vaccine hopes are really difficult. And I really would say any drug in phase 3 trials, anyone who has followed the pharmaceutical industries and biotech industries for years knows that we see these stocks move very strongly on hopes and expectations. And you still see, even in this case, vaccines, but any compound that makes it even to phase 3 trials, the vast majority of them will still fail. So we're all looking for that vaccine. We're all hopeful. If we see a vaccine in 2021, anywhere in 2021, it will be the fastest vaccine to market in history.
Then, given that, given the failure rate in phase 3s, as you say, have the markets placed too much hope on vaccines? Because that seems to be the one thing that keeps driving the market or saving the market,
right,
if not the Fed.
Yes, I think the market, particularly when you look at the individual pharmaceutical companies involved in that research, sure, one of them or maybe one or two are going to be winners. But I do think that the valuations for some of those companies that are aggressively pushing things through trials and making progress, those are very optimistic valuations. And we are likely to see quite a number of those stabilize and come down over time. The market as a whole, I think it's fully valued, and I think we're bound to see more volatility with so much uncertainty ahead of us. But I don't know that we are moving just on vaccination hopes. I think we're moving on all kinds of economic hopes.
Thanks a lot, Liz.
Thank you.
Our thanks to Liz Miller of Summit Place Financial. I'm Fred Katayama in New York. This is Reuters.